Yesterday, Nvidia earnings came out and did beat the market expectations, so that did provide some short-term relief. But in today's video, I want to talk about, was that enough to reverse the trends, or are the bears still fully in control? Not only that, but I also want to highlight to you today exactly why it's more important to be focused on the data that's coming out today than Nvidia, because this is going to have much higher impact on the market. So before getting overzealous with regards to the long trades and any sort of bounce that you're seeing in the altcoin sector, make sure to watch the video until the very, very end. That doesn't rule out the possibility that there will be short-term trade opportunities which you could play to the long side. I want to show you exactly what you need to see if you are bullish and you want to see continuation over here. Stay until the very end, smash the like button. Let's get straight into the show content. And the first thing I want to go over is, if we just go on the Whale Trades website over here and we scroll through to the very bottom over here, we have a lot of data that's going to be coming out. Remember, a lot of this data has been on pause because of the government shutdown, which has now been lifted, which means that a lot of this data will start to come out, especially data from September. So we have the initial jobless claims, we have the non-farm payrolls, unemployment rate, and existing home sales. And remember, existing home sales also very, very important, because this shows us the overall health of the real estate market, which is one of the biggest drivers for all markets worldwide, holding the most liquidity by far. So if that is generally trending towards the upside, well, there's opportunity for liquidity to flow from there into other markets and continue the bull runs. But if we start to see cracks and weakness over there, that could be a real telltale sign as to what may come next. So let's get first into the rest of the content over here. What we're going to have a look at is the DXY, which I haven't brought up for a very, very long period of time. And this is a super high time frame chart. It is the monthly, and you're seeing this continue to press towards the upside over here. So what I'll be looking for is, this is going to take a couple of months, but possible weakness coming into that 0.618 at a later date, where you'll probably put in a bit of a pullback. But right now, this is a little bit of an interesting signal, we should say, because as long as the DXY is trending towards the upside, it's not to rule out that it's impossible for risk on assets to rally. It's just a lot more difficult for them to rally. We'll also update on the rest of the market. So we still have the gold short trade over there, in the money, in profits over here. I gave the update yesterday, both on YouTube as well as in Whale Room, with the exact opportunity for anyone that missed out on the first trade opportunity to get a short trade in. It was exactly on the purple line over there. We said maybe in an extreme scenario, you'll run up to our price label, which would have been the golden pocket, but didn't get that far. So what you'd be looking for today is continuation down. I want to be clear, these are high risk trades, but there's absolutely zero chance, literally zero chance, that we can lose on this trade, because we entered early. We eliminated the risk by moving our stops to break even. And it's the same thing for silver, right? So we are trying to catch a bit of a swing short trade over here. Of course, if this does break above 52, 53 on silver, well, that would be the signal that, of course, the trade idea is wrong, but the trends are down. You have your higher high, which broke down into a lower high, which bounced up into into a higher low over there, lower high. So the trend is shifting as of this part over here. And I'll just quickly highlight that. There's your lower low, there's your lower high, coming into the resistance and rejecting off of that downtrend over there. So we'll see if we can get a bit of a deeper pullback. I do believe that gold and silver will top this year. It's just a question of, do you rally through one more time, take out all of the liquidity in form of any other stop losses? Remember, when commodities begin to move with pace, it becomes difficult to get your entry, right? You have to fight for the entry. So that's exactly what we're doing over here. We're fighting for the entry. If you break above this, stop out at break even. There's absolutely zero chance to lose. I want to be crystal clear on that. And if you consolidate above there, we'll just look for a re-entry. But with only about 5 weeks left to go for the year, we'd expect that there should be some sort of a top over there. And look, we are absolutely nailing it in Whale Room on the low time frame trades. Gold short trade over here from one of our traders. Look at that, moving through the paces over there. This is yesterday. If you are looking for low time frame trades and ultimately moving into completely full profits over there, it's not the only one. We have this trade over here as well. TP 1, 2, 3, 4, all of them hit. Bang, completely in the money over there on the gold trade. It's not the only one. We'll quickly update on MicroStrategy, which had an absolutely massive collapse yesterday, dropping another 10%, up 50% over here on this trade, which is not even my main account. 40% since the entry, 41% almost since the entry over here. So really good stuff. If you are looking to take any of these trades, remember, There is a link in the description below. I'm taking these trades. Some of them on my smaller account is MicroStrategy, and then I also have them open on BTCC. So MicroStrategy I have here on Pinex, and then the other trades, gold, silver, shorts are on BTCC. Both of the links are below if you would like to claim a sign-up bonus and a discount on your trading fees for life. Use those particular links. And let's continue, right? So we need to look, of course, at Nvidia. So Nvidia, what we said yesterday is that you don't want to spend too much time under the yellow box. This is your big SR flip region. Looking at the low time frames like the 4 hour, you can clearly see over here, if we just grab our pen, you have resistance, 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 resistance. You know, price comes down, fights, deviates, attempts to hold that as support, rallies up, support, rallies up, and comes down, right? So this is a pretty clear area that you want to defend, specifically for Nvidia. The fact that they beat earnings, of course, is a great thing to possibly continue. And pay attention to the bounce, right? If you do get a bit of a bounce over the course of today and through the rest of the week, remember, we've longed this multiple times. The last long hit exactly perfectly. Look at that. Exact. If I put it in a horizontal ray at our target over there, look at that. If we zoom in, literally perfect wick over there, and take profit, full take profits over there. So I would actually say that if you can defend this, you would be able to look for some new long opportunities. But I wouldn't rush into this, right? Don't ape into this. This is really the line in the sand for me about that 184. Anything below that, bears are in control. Anything above that, there's a bit of hopium that bulls will continue this towards the upside. But I'm not taking another trade on this. We'll reevaluate at a later stage over there. So just leave that one alone for now. Circle getting absolutely rinsed. We spoke about this a whole lot. I told everyone not to get into this trade and to wait for a meaningful pullback coming off of the highs. I guess you've now done that. You need to get a bit of a rounded bottom over here, but down 77.4%. Coinbase as well, struggling and making its way down towards 219. Robinhood was also down quite a lot. This is similar to Nvidia in the sense that you have your SR flip region, so very clear level. You definitely want to see Robinhood getting back above that 120. Dan says, yeah, was Nvidia results good? Yes, it was. They beat their earning expectations, so they were definitely good over there. Okay, moving on, let's get into the rest of the stuff. Remember, for those of you that are in Whale Room already, take advantage of these absolutely killer traders, right? Farouk section for gold trades. And then, of course, you also have Wall Street Sailor Singh over here dropping tons and tons of trades, doing intraday sessions as well, helping people to also pass some of those prop firm challenges so you can trade with other people's money. So link in the description below if you guys do want to join Black Friday. We are now 65% full in terms of the Black Friday sales. So only a couple of spaces that are still available. I think by the 1st of December will be fully closed out. So if you do want to join, you're getting 48% off, right? Let's move on over here. Bitcoin at that theoretical monthly demand, very important zone, getting a little bit of a reaction. Remember, we've spoken a whole lot about this. Let me just go back to this chart. This has been the one that we've been looking at, right? That parallel channel price coming into that key support for a potential bounce zone. But you know, is it enough? Is it enough to reverse price? We also spoke about the moving averages spreading away from each other. At the end of the day, there will always be long opportunities and short opportunities. It's about your risk management and your timing. So let's talk about that a bit, right? There's a couple of key things that I want to highlight specifically for the high time frame traders. By high time frame, I mean investors, the longer term people, right? Those of you that prefer to buy spot and hold, and then we'll move on to the medium time frame, and then of course end off with the low time frame, which would be today's trade opportunity. So this is for the high time frame, guys. A quick reminder, your monthly chart is incredibly bearish. Like, don't deny it, right? You are absolutely in denial if you do not think that this is bearish. You're coming into demand over here, which yes, could lead to a bounce, but very likely that bounce would lead into a lower high. And this is what needs to be achieved by the bulls in order to avoid now the monthly MACD bearish cross, which you can see is currently in motion. I want to remind you, anytime that you've had a monthly bearish cross, you are in a bear market, right? At that point, you're in a bear market. So how high would bulls have to run price, which isn't out of the question as possible? You need to see bulls close price around $97,400 before the end of the month. If you can do that, you might maybe just avoid that cross over there, and this will start to flip back green or neutral over there. And then I guess there's a little bit of hopium. So for the monthly close, that's what you're looking for, right? see if bulls can close price above 97,400. That is the number. That's what you want to watch out for over there. We can move on to the lower time frames, which already have the 3-week cross. And this is where you have a lot of conflicting data, because to get the 3-week to cross back towards the upside in terms of both the histogram and the EMAs, which have crossed bearishly over there, you would need price to run up $133,000, right, to get back and recover above those levels. And we can look at the 2-week, which is also in free fall on the MACD. 134,000 would be the number to recover. These would be all-time highs, right? Effectively, those are all-time highs. And then if we have a look over here at the weekly, look, you've put in a pretty sizable pullback now. So if we go from ultimately those highs to the current low, you have officially hit around that 30% mark. What's good news about this is this does provide an opportunity for a potential bounce, right? That's the one good thing. Anytime that we see typically around those 30% pullbacks, that is generally the area where you do want to start to look for potential long opportunities. But remember, those longs are very likely to fail into lower highs. As long as you know that, that's the important thing. So MACDs are still coming down. We can look at the RSI over here. This is not a shakeout. This is very unlikely to be a shakeout. I just want to be clear on that, because anytime that we look at the RSI and it drops below 50, it's momentarily, right, below 50. Very, very short amount of time. Usually you find support around that 44, and then you start to put in a strong recovery. So the fact that you've hung around this region for so long drastically increases the chances that any bounce that you have now will be met with underside resistance, probably a lower high in the RSI, and it's just going to continue towards the downside over there. But you do you, right? I know that there's a lot of mixed signals in the comments. I see all the comments, it's denial, right? What can you do, right? Unfortunately, people just can't deal with it. They're in extreme pain because, if you really want to see someone in extreme pain, take their money away from them. And that's exactly what the market has done. It's like, they short circuit in their brain, and they just can't see through anything else. So I'm just presenting the facts and the data. You can do with it whatever it is that you want. I present both the long and the short case. So you choose. It's totally up to you. And I want to be clear. Yes, these are theoretically approaching major bounce zones, and you can go back to any of those videos where we specifically spoke about this. This wasn't drawn yesterday. This was drawn months and months ago, and we highlighted this as a very key point. $88,000 was the number. I said it when price was already up here around 112 and starting to break down. 88K would be a very significant level to watch for a buy the dip. Now, I want to tie this all together for the high time frame, right? The significance of all of this is it looks very sketchy on the monthly. The 3-week, there's no ways Bitcoin's going to rally up and avoid this, at least not yet. These numbers will change every 3-week close that occurs over there. But if you have a look over here, the general consensus, this is not my consensus. I have a much earlier lead to enter and exit me from the market than the general consensus. But the general consensus across a lot of channels is that 2 weekly candles below the red exponential moving average, which is the 50, or the MA if you want, which is just a bit slow moving, ends the bull run. When that happens, very high probability that the bull run has ended. Remember, my signal is much quicker leading, which I already told you when you start to hang out underneath here around that 108K region. That was when this was an incredible major warning sign, because you had met your timing end 1,070 days into the bull run. The longest one we ever saw was 1,068 days. You not only did that, but you also broke that stop and reversal indicator over there, and price is hanging below the 21 exponential moving average, and it's rolling over. So therefore, that was already the exit signal for me personally. Now, again, there will be bounces along the way, but I want to be clear, when you do start to bounce up over here, let's say for argument's sake, on the low time frames, you begin to bounce, this is going to be met with a whole lot of resistance, right, as those EMAs begin to roll over, and that will very likely be a complacency bounce. So do with that info what you will. If you want to go all in long, go for it. But, when you get into that territory, between about 100, 110K, I'm giving you a broad number because this is high time frame stuff. That's where you want to make some serious decisions, right? USDT dominance as well. It will create absolute wreckage if it breaks above 6.4% over there. This is still green. The trends are still towards the upside, and you're coming in 1, 2, 3, 4 times. 4 times are very highly likely to break out. But I would think that you should at the very least get a little bit of a pullback over here. In order to get super bullish, you basically need that to happen. Is it possible? Of course it's possible, but more likely you're going to do something like that and then rally through. So this drop off over here equals your complacency bounce, which would be your rejective area over there. That's the most probable outcome. Remember, this is subject to change because markets provide new data and information, but that's what it currently looks like from where I'm sitting. Now, in order to have a highly confident buy the dip opportunity for the high time frame guys, we're still talking to you. We're still talking to the investors, the long-term guys. In order to get a highly confident buy in a downtrend, which this is, which is still possible, you can make great money on those bounces. I would personally prefer to see the funding rate go more negative, the aggregate funding rate average, which is this, right? Any times that on a weekly time frame that we begin to see that go red, like that, like that, like that, like that, even if it is in a downtrending market, it elicits pretty big bounces. In a bull market, it's even better, right? But are we still in a bull market, right? You let me know. So here's the COVID lows. Negative funding, huge bounce, right? After that, you had another bit of negative funding while people were fighting and battling that 10K resistance over there and getting short, absolutely face melted through. And then after that, we had another series of negative funding following one of the biggest dips. Effectively, you could say that was where the major top had occurred in the market, and you again rallied aggressively towards the upside. And I would say that where we're situated right now is probably more similar to this environment structurally, right? So this is your 69K top. Price came down aggressively, printed negative funding, elicits a pretty sizable bounce. I'll show you percentage-wise what that looks like, because I would say this is more similar to where we're at right now, right? That's huge. For Bitcoin, 25%, altcoins, 50, 60, 70, 80, even 100% on certain ones, you'll get some big moves, right? And then you can see a couple of other times where you had negative funding, and you again put in a sizable bounce. Let's have a look at the percentage of this one. And this is where I publicly had my first opportunity to ever come on YouTube. That was a 45% bounce. Publicly, I was on YouTube. Go back to that candle over there. I'll even give you the date, the 28th of March, 2022. And I aggressively and publicly shorted Bitcoin, saying we're going under $20,000. So moving on, right? FTX collapse, negative funding, price pumps. USDC.D peg, negative funding, price pumps. Yen cash carry, trade unwind, price pumps. Israel, Iran, slightly negative funding over there, price pumps. And this is where we currently find ourselves. So it's not to say that you 100% absolutely have to get negative funding, but it's preferable and it strengthens the signal if we do get that. So if you could see price fall just a little bit lower. Look, for me, it's good enough. The target was 88K. That was the target. We'll talk about it when we get to the low time frames now. But I would love to have seen that combined with negative funding. Now, if you interestingly have a look over here, you had negative funding over there, and then you actually came down lower one more time. So keep this on your chart. I'll update you as well when it's relevant. But this would be a real telltale sign that we are now in that bounce zone. So there's a lot of longs that are still piling in. So maybe they'll get flushed. We'll see later on this week. But at the end of the day, right now, it looks highly probable that you're not going to close back above the 50, which is $100,000 in the next 3 days' time, which is going to close your second weekly candle. And that's where the general consensus flips amongst the majority of people that you're now in a bear market, right? Go and vote over here. What are you doing with this potential long over here? Looks probable that we're going to bounce. Question is, are you longing? 100% long from here, 37% of you. You 50-50, that's 33% of you interested in the long, but you're not sure about the trigger plan. We'll talk about that. And then you got 14% of you that are going to short. And then we got 17% that just believe we're going to nuke straight through and go completely low. So who is going to be correct? The majority, I'm sure, right? It's always going to be the majority are right. Every time the majority are always correct. Guys, that's absolutely sarcastic. But, just be careful. That's all I'm saying. Utilize risk management. This is a key level. I'd love to see price bounce. The good news is that time reinforces a level. And actually, the last time you properly tested this was all the way in September, which gives you, basically a whole year. You almost tested over there in April 2025, but this is almost 12 months before this trend line was tested. Now, diagonal trend lines are mostly, I don't want to say useless. They're just less probable, less successful, but they can work for a short-term bounce, right? So 12 months of reinforcement at this level in terms of time, decent, right? So you could get a little bit of a bounce over here. And if it's going to be a good one, I want to play it. But again, let's wait for the data to come out later. I think this will be either the fuel to push price higher, or it's going to be the fuel to drop things a little bit lower to give you that negative funding. Now, it's up to you how aggressive you want to be. Remember, you do you. Whatever makes you happy in life, you do it. I'm not here to control you. I'm just providing you with the information. I think that if you are in the business of not losing money, but being okay with missing out on opportunity, which sometimes is the better approach to take, to be honest with you, then wait for the data to come out. Maybe the data will drop things one more time to create the negative funding, and you'll have a much higher probability long setup. But as always, I'm trying to please too many people at once. So I'm still going to give you a long trade today. Stay till the end, right? You got to do it on the low time frame if you do want to. So sentiment tracker 11, we're in that capitulation zone in terms of sentiment, but not in terms of the funding, which is very important. The funding is more objective and more significant from where I stand. The long to short ratios over here, let's just quickly go to the top. Pretty neutral. Just before doing this video, before going live over here, it was actually majority skewed on the long side, but now we basically balance. So market is trying to look for a direction over here. No big players have stepped in to choose that direction yet. Total liquidations, sizable, right? People getting absolutely rinsed on leverage once again, but it is under $1 billion. And who's getting rinsed? Of course, the majority are always right with sarcasm, right? 425 million longs liquidated again. So it just shows you, right? There are still... what is that saying, right? You know, that saying about how bulls will continue to get rinsed until morale improves. That's basically the case over here. So the bears will continue to hold control until bulls continue to get rinsed on leverage until morale improves. And then eventually, you know, that's where you get the real bounce. So I'd love to see that in combination with that negative funding. That's what I'm hoping for over there. The good news is that on this chart, which is typical, it has to be taken with context in this scenario, because of course the daily exchange volume would increase as people get liquidated and they try and rebalance things. So it's not necessarily to say that this is a great bullish sign, because typically what we look at is we look at the daily exchange volume and we say, hey, you know what? If this is finding a base and moving up and grinding up slowly but surely, then it means that bulls are on their way back. But you have to use the context, which means a lot of people are getting liquidated. They're rebalancing things. They're depositing new money on the exchanges to cover their ass and add new margin to not get liquidated. And therefore, these volumes will rise. So I'd wait for the dust to settle a little bit further. But you know, so far, we've seen a lot of outflows. I think that you had one of the biggest record outflows as well. It should reflect later on today for the ETF outflows on ETH specifically. And these are certain things that we do want to see and we look for when trying to find a bottom. In the same way, if you have a look over here, look at these big outflows. There we go. Within this environment, orange line is Bitcoin price, and Bitcoin eventually came down to 80K, found support and rallied. So is it going to be the same thing? Very, very, very possible, but just let the nerves settle a little bit, right? And understand your risk when you're taking these trades. So let's move on. We did say as well, in terms of this chart over here, well, the momentum that the bears have had will not be able to sustain for too much longer without at least putting in a bit of a bounce to reset the trend. Remember, the trend is down, lower lows and lower highs. So lower lows and lower highs. Now, when that momentum becomes overextended, as I'm circling over here, the only way that that momentum can be reset is in the form of a corrective bounce, which will then probably go lower. So therefore, we look at this chart to determine when that corrective bounce will come. Redlined, 2 in a row, 2 days in a row. It's basically showing you that you know, bears are slowly going to start to run out of momentum, and that's where you look for that possible bounce. Here's your 5-day. It's still in motion. It just means that this will, you know, flatten out a little bit, reset, and then bears will probably take back control, because at the end of the day, you are in a downtrend. So there it is, daily fair value gap. This is where the long trade comes into play. I would, if I were you, base my stop losses around yesterday's wick low as opposed to looking somewhere down here, because if you take out this wick low, you're basically going to absolutely sweep all of this. I'm going to highlight it for you. So this is liquidity ripe for the taking over here. And if you drop below that wick over there, you're anyway going to sweep into this liquidity. So you may as well just have a tight stop loss. And if you're incorrect, you get out, you sweep that, and then you look for a new opportunity. Now, if you do drop towards that 80 to 85K region, I do believe that you'll get the negative funding. But of course, there's a lot of giga bulls in the house. So I'm trying to help you, right? I'm trying to give you the trade opportunity based on the TD sequential 9 buy, which we also spoke about and we warned ahead of time. Okay, so there's a question over here, right? Kyle Slab at V-shaped recovery, biggest trap in history. I don't think so. I think that maybe a V-shaped bounce into a lower high or into a rejective candle is the most probable. I think that bulls are going to struggle massively to get through this resistance over here, the 50-200 EMA death cross that's occurred. If you do even rally into that, I think when you meet that area, you're going to find resistance over there. You've been putting in, lower highs, and this is your last lower high. So you've been also putting in lower lows throughout. So there it is, lower low, lower low, lower low. So you're missing that lower high, right? So what's most likely to happen over here is some sort of a dead cat bounce, a reversal into this region over here. You're probably going to reject around that 102,000-ish dollar region to put in your next lower high, which these moving averages will be coming down at that point. That's the most likely. I'm being honest, right? Take it or leave it. If you don't like it, I can refer you to one of 10,000 of the other bullish channels that's out there. If you want to hear the up only, it's up to you. It's your money. Do whatever you want. Do whatever you want. It doesn't affect me. Honestly, it doesn't affect me. I am sitting very comfy in cash and I'm going to play the bounce as well. But yeah, do whatever makes you happy. Okay, so let's continue on over here, right? So what are we looking for? Because I said I'm going to give you, as always, the exact risks to reward trade over here and exactly what you want to see in terms of the long setup. So I think building a long position anywhere around here would make sense with your tight stop loss just underneath that region over there. And of course, we're going to use some fibs in terms of targets for underside resistance. And what I'm going to do, of course, is we're going to look from the most local part of this sell-off, right? Which is going to be your local high down to the local low that's now occurred. And you're going to, of course, look to profit take into that region. So there it is. I would personally want to have the majority of my profits off the table at about 100,850. That is your long trade. It's a counter trend, trade, right? So we have the confluence of a couple of different levels. There's a few things going for the bulls here for the bounce. Let's go through them very, very, very quickly, right? Monthly demand, okay? Monthly demand is one thing. We have the parallel channel on the 5-day time frame. We have the daily, which is completely redlined, which suggests that you should put in a bit of a bounce to recontract this before the next move up. So that's one thing over there. Daily fair value gap. What you really want to assess, if you know that this is going to be a V-shaped recovery and you're just going to absolutely rip through to the moon, well, if you do start to bounce over here and you put in some sizable volume and this volume begins to rise with price, well, that's a good sign, right? That's a very, very, very good sign. So remember, guys, we drew this level out literally ages ago when price started to correct up here. I said in a worse case scenario, you're going to come down for that daily fair value gap. You've swept that. You've hit that level now. So yes, this is go time, right? So in terms of your zones, I'm going to go on a low time frame because, of course, we need to look for a better trigger plan, but this is your high time frame trade idea, giving you a 2.13 to 1 risk to reward ratio. Stops are below. Remember, for lack of any other word, don't be a retard and ape all your position in over here. Kind of scale in, right? Pyramid into the trade. Like smaller positions at the top, build your positions bigger. That reduces your average, which now gives you a more favorable 3.8 to 1 risk to reward ratio. Like you have to use a bit of common sense here when you trade. So if you don't understand, join Whale Room, right? I'll help you over there. Okay. And of course, the other bullish thing that the bulls have going for them is the TD sequential 9 buy. But all eyes on the USDT dominance, which continues to melt up. I think it's safe to say that we can elevate this now in the same way that we just ride the downtrend like this, right? we just take our horizontal ray when price is in a downtrend. We say, hey, you need to get above that level, above that level, above that level, above that level. It's the same thing over here. Now we can say that if USDT dominance on the low time frame, like the 4 hour, begins to break below this, there we go, that higher low, well, that will be good, right? That will be good for the bulls. Then maybe there's some chance or some opportunity over here. So you're looking at something like this. You would want to lose that. You would want to throw back into this as underside resistance. Call that a deviation, which means you failed to get back above that 5.87% high. And then you're going to play that towards the downside, which just simply equates to the dead cat bounce that we're talking about over here, which is where your long trade comes in. And then you're going to probably reject over there and go lower. That's the most likely outcome, right? So, of course, shorting right now would be insane. I wouldn't short. You've tested this trend line a whole lot over here. Look at this. You've been riding it down all the way. The yearly open is the level to recover. So, hopefully that USDT dominance breaks down, and then hopefully BTC gets a big push up. You flip the yearly open into support. And this is now, I guess, where we can factor in how this trade will work out on a lower time frame. Okay, so let's do it. Again, guys, if you want more of these lessons, please make sure to join Whale Room. I just want to be clear, this special is the best that you're ever going to get, 48% off. You'll never, ever, ever get bigger discounted deal when it comes to joining Whale Room. So you have to use the link in the description below and then take that promo code, right? So if you are joining, take that promo code over there, Black Friday. You need to apply that. I'm going to show you how to do it. Copy that, go through over here, scroll through to the bottom, say sign up. There we go. Copy the code. I guess they've even improved it for you over there. And then paste that. Look, if you paste it in, goes from 2268 and apply it, and your discount will be applied, right? There we go. 47.13% off. So your discount is applied. Let's move on. Let's go plan this trade out. Okay. So I'm going to move on the 12 hour and I'll show you why. First, I'm going to go on the 12 hour. So you kind of have the swing failure pattern over here. There you go. That yellow line. Price came down to 89K, rallied up, rejected from the yearly open, swept. That sweep is effectively where now you'd have your stop placement below that sweep, because if you come back down there, you're wrong and it's just going to continue to nuke lower. So therefore, you'd be looking for the long trade over here and you want to find a better trigger plan. Now, things get really exciting for the longs if you can break above this. And I'm going to put it in pink to change the color, okay, to make it obvious. So if you can break above this, this is where things get really exciting. And this is why you plan out your long trade like that. So I'm going to quickly pull out the risk to reward tool for you again. Let's go with our long position over there. And then we'll work our way down. This is the same as the other chart that I've given you. We said, you're longing basically into that $100,000 region. You can see how that 12-hour 50 EMA is also coming down over there. Let's zoom in. So we'll go a little bit on the lower time frame. You're currently rejecting from the early open. Let's drop it down a little bit further. I'm just getting an idea of what's going on over here. So you're holding above that 50 EMA on the 1 hour. That's decent, but you're coming into resistance, right? See the yellow box over here? This is significant. That is support, consolidation that marks price down, resistance. So you only came into this level once. One resistance fails. Second attempt, will it make it? I don't know. So this is where your opportunity comes in, because if it doesn't make it, well, we zoom in on the 15-minute time frame and we can go a little bit lower down. Now you can start to target the very, very low time frame, 50% level from low to high, and we'll see how that lines up. Okay, let's go from low to high. There we go, low to high. Let's mark off that 50% level, and it's just under Monday low. Now, this would give you a much more favorable trade, right? So this is what I'm talking about by scaling in. You could add a little bit over here because you're holding these EMAs and you might start to push up, but you're longing into resistance, just to be clear. But I've built the higher time frame picture of what you're looking at, right? So this is what you're looking at. And I do have a long trade on Bitcoin over here in the form of a grid trade, right? Which is still on the table, just by the way. But of course, you don't go all in with your spot because the trends are down. This is a counter trend trade. So this would be a more ideal scenario of what you're looking at, because now this is giving you a 3.63 and you have everything completely valid over here. You're defending the Monday low. You're coming into this zone over here. If we just expand this a bit on the 15-minute time frame, you've got this little consolidation over here. So you obviously want to hold that. So if you do reject and come down one more time, look for more long trades over here. This is going to be about 90,700-ish. Stop losses, of course, are floated below here. And that's what I'd look for. We'll see what happens in the US market open. It's going to, of course, affect price, but still get some on the table within this region. I think it's worthwhile getting some on the table within this region. Confirmation is if you start to break above the yellow box, and even better, the high time frame positioning shifts if you can defend above $95,000, $96,000. So just to make this make sense for you, because anyone that's new will probably be very confused, this is a counter trend trade. We work out the probabilities of where price is most likely to go. So you're looking for the longs here with stop losses below the most recent lows, and you're longing it basically towards that $100,000 region. We'll get exact. It's 100,850, and the thesis around that is the 0.65 and 618, right? So let's just quickly get that again. 100,851. So we'll move that up a bit. 100,851. Okay, there we go. More or less in that zone. However, if you assess that price is moving into this zone with, a lot of strength, so you rally through, you flip this, and it's holding this as support. Now you can possibly extend your target like above, right? Maybe you don't need to completely close that trade. And now this drastically changes your risk to reward. Okay, I know that also there's questions around the bear moon, right? The bear moon, yes, the bear moon is here, right? It's arrived. It has arrived at a city near you. But that doesn't mean that you can't bounce. There's the bear moon. The bear moon is here. You need to understand this is a very extended move. So the bear moon plays out over about a 15-day period. So it will probably work out, but you will probably first bounce, right? You'll probably first bounce, set in the lower high, and then within that 2-week period, you'll find yourself at new lows again. That's the way that I'd be interpreting the bear moon. So because prices come down so aggressively, it's very rare that you see so many days in a row. I think we like 8 days in a row of just straight selling. Hence why we're getting that TD sequential 9 buy that I gave over there. And this suggests a 1 to 4 candle correction. Correction in a downtrend equals an upside move. 1 to 4 candles or 1 to 4 days of upside. All right. I hope that makes sense. I hope that makes sense, guys. So that's the plan of action, right? Traders are crushing it in whale room. This is Chris, full TP over here on Fetch AI. Definitely balls of steel to long altcoins in a downtrend, but he's got amazing risk management, super good trade over there. Big congratulations to one of our coaches. Yeah, the guys are crushing it, absolutely milking it for all it's worth. The traders are doing super, super well. I also dropped my trade in there. Okay, that is the MicroStrategy trade, 50%, right? That's my one over there. So good stuff. Liquidity, right? Liquidity over there. It is building both above and below price. The weekly time frame has more on the top at $97,000, which is, a little bit below where our target is, but you're going to go multiple TPs along the way, multiple take profits along the way. And then we got the liquidity on the daily now at 88.3. So let's quickly see that. 88.3, right? So I'm floating. I'll pay attention to that. I'd float my stop loss probably just below that. Give it a little bit more room then, because just in case, right? Just in case you come back down for that zone over there at 88.3. Okay, cool. What else have we got? What else have we got planned over here for you? Okay, let's just check this. Also in whale room, all institutional data, by the way. This stuff costs a lot of money, guys. So that's one of the benefits as well. In whale room, you're going to get access to this. We post it daily. Deltas, negative for BTC ETH, positive for Solana, negative for SUI, positive for Sonic actually, and neutral for ASTER. So the most important ones to watch, in my opinion, is going to be Bitcoin and ETH, because this shows you the probability of a counter trade or short-term bounce over there. So again, if you do want to join, here it is. You guys know it. Use the link below. We are 65% full. Okay. ETH BTC, I'd love to see it bounce from here. It's a very significant level, but wait for the corner to turn, right? So this is still downtrending. Rather wait for some strength over here before getting too excited, or can go very horribly wrong. You have hit exactly into the mid-range of the white line. There it is. White line, exactly. And it's putting in a small bounce over there. It will look much better if you get back above 3,175. This will look decent for ETH, something like that. And again, you're not going to V-shape in one day, right? It would be something like this. You'll have a little bit of time. You'll probably chop around here. This is a weekly time frame, though. You'll probably chop around here a little bit. Like if this is going to put in a rally, a proper rally, like realistically, it's only going to happen in Q1 of next year. I'm being honest. I don't see this, getting back to these highs before the end of December. So just be aware of that. Alrighty. What else, guys? Let me know in the comments if there is anything else you want to have a look at. Let's see. I'm just laughing at your guys' comical comments over here. Mostly good stuff, all good things over here. You guys have been an amazing community. Thank you for being on the journey with us, right? It's been great. It's been difficult, but it's been great. We've navigated it, I believe, very, very well. If you agree with that, smash the like button. If you disagree, you can actually click this button, dislike it, but twice, like that. 2 times. You have to click it twice, like that. There we go. Okay. All right, guys, let's have a look. Let's see what else do we have over here. I don't know if there's any point in spending too much time on all the various different altcoins, right? For the high time frame stuff, because you really need Bitcoin and ETH to turn before you can get too excited over there. Let's go. Let's have a look at a few of them. I just want to see what's going on with Zcash. So still very strong. We'll drop on a low time frame for that. Still looking very decent. I still have a little bag there that I'm holding. It's nothing massive. At the end of the day, if Zcash, if it starts to close, if you close even a single 12-hour candle, I would go with a 12-hour candle because that's 3 4-hourly candles. 3 gives us a confirmation on a low time frame. 3 4-hourly candles above 740, and it's going to absolutely pump. I don't change my stance. I still think very likely this would have put in its major top all-time high before the end of December. Okay, that's my thoughts. So what else? ASTER, how's ASTER looking? Still very good. Still putting in those high highs and high lows. So if you are a trend trader, pretty easy stop loss. I mean, you could be long right over here and you can just have your stop at about $1.2497. Call it $1.25, just a smidge below that. As long as you can defend that, this is your next high low and you should continue that up. Alrighty. Okay, let's see what else. How's Pump doing? Okay, Pump is still mega wrecked. This is still very much in a downtrend, and I think very likely that Pump will tag the yellow box at the bottom of the range. Sui, absolutely smashed, just downtrending over here. It's got a lot of work to do. Yeah, no trade over there right now. Solana, let's just readjust this. So watch for resistance on Solana. I'm going to highlight the box. I think this will be a difficult area for Solana to recover. If it can get above this, very sloppy chart still, even if you recover above that. But this is your next big resistance if Sol runs into 152. Right, 152 for Solana. All right, but guys, let me know in the chat, like on a personal level, I would love to know how you guys doing. Give me a 1 if you're doing amazingly. Drop a 1 in the chat. Give me a 2 if you are like somewhere neutral. Give me a 3 if you're just down and wrecked. And give me a 4 if you're a tired boss. So 1 is good, 2 is neutral, 3 is you wrecked, and 4 is I'm tired boss. Let me know in the chat. Drop a 1, 2, 3, or 4. I'm very curious to see where guys are at. Okay, 2.5, 2.5, 3 or 4. In cash, some people. 2.5s, there's actually quite a few a lot of 2.5s coming in. So you're a little bit worse off than neutral is what you're saying, basically, for the majority of guys. Little bit, which means you're relying on this complacency bounce, right? If you're 2.5 now, then I would assume that the complacency bounce is going to push you back to like maybe a 1.5. You'll be a little bit back in the money. And then that's where you need to be careful, right? That's where you would need to consider taking some profits. So I've said multiple times, 2025 was the year and still is the year to not be a hodler. That's what I said. I said, I'm only taking each trade as it comes. And this was the reason why. We could see on the daily chart that there were like, you know, signs of potential distribution over here. Price just chopping about. This was actually a question that was posed to me in Whale Room. So I think I'll just share it with you because I made notes over here for everyone in Whale Room. This is what I said. They asked me, you know, what are you doing? Like, what's your plan? What are you going to do for 2026? And it's very similar to what I'm doing right now, but maybe a little bit more conservative even than now, because there's been times in this year where I've gone 100% in, like my full portfolio, full ported it into certain trades just for the trade opportunity. When you will lay out your risk to reward, you know, I risk certain percentage on my portfolio for certain gain, and luckily it worked out very well, but it was calculated risk. But for next year, what am I doing, right? So if next year is a bear market, which looks to be the most likely, I mean, we probably already started the bear market if the actual top's in, then this is the plan. Out of 100% of my capital, I'll take 85 to 90% and I'll spread it across different stables. That could be US dollars in an actual brokerage account or bank account, USDT, USDC.D, so splitting it across different stable coins. I'll allocate probably about 3 to 5% for swing short trades that I'm going to hold. Things like MicroStrategy, for example, things like gold, silver. If I can get the perfect entry into those, I'll just hold those and swing them short for as long as possible until you know, the shorts have run their course. And then I said I'll allocate about 5 to 10% of the 100% of my available capital for active trades. Whereas now I was using a much bigger amount, right? In the beginning of this year, probably still 100%. The first 3 to 6 months was about 100% allocation for active trades. And then second half of this year, I've been probably reserving about 25 to 50% for active trades. Next year, I'll go even less risky, because what you'll find is a lot of people, you know, even if they leave the cycle profitable with, you know, 2-3 years of a bull run, they got in near the bottom and they're up, like maybe they're up like 4, 5, 6x, somewhere in that region to be realistic. Then they can lose all their money in the first 6 months of the bear market through this attempt of active trading. And that's why I'll only allocate 5 to 10% for active trades. And active trades will be both longs and shorts, right? It's whatever the best trade opportunity is. So that is effectively my plan of action. And by the way, where a lot of this active trade capital will go, or it has gone, is I've already purchased, as I told you guys, 30 of these Black Friday promos, because you buy 3, you get 6, which means you're getting a 50% off. And the most important part to me is I'm getting 100% of the profits that I make, which is unheard of when it comes to these prop firms. So Black Friday is the time to load up on all of these deals, right? That's what I've done. And that's where, let's go back to that. That's where some of this active trading capital has gone. So I bought 30, get 30 for free. I'm locked and loaded for the entire year on big accounts. If you do this, by the way, I just want to be clear, guys, I have to highlight something for you as well. If you're going to take the same strategy as me and buy a lot of accounts, like 30 accounts, what you should do is spread them across, you know, base accounts, starter accounts, skilled accounts, intermediate accounts, advanced accounts, and expert accounts. And the reason why is, let's say you have an expert account. I mentioned that, you know, I might take trades on different accounts simultaneously, but you can't open, it prohibits you from opening, for example, like 200K accounts at the same time. Like you can't be long on one 100K account and short or long on another 100K account. So 2 separate accounts simultaneously. However, you can be long on 100K account and short on a 50K account, just as an example. Okay. So the link is below for that as well. Bitfunded, great opportunity. Load up on your Bitfunded accounts, because then you have that 100% profit locked in. The profit share is locked in until you use the account, right? So even if you use it 2 years from now, you still got it. Alrighty. So what else? What else have you guys got for me today? Let's check your comments over here. We've gathered that a lot of you want this complacency bounce. So, you know, this is where you need it to come from. It needs to happen basically now, today, this week. It's just, again, unfortunately, I don't believe even this long trade setup over here is going to have the momentum. Maybe it would actually, because you have 10 days left for the end of the month to clear that 97K and then avoid that death cross. So it's going to get interesting. It's going to get interesting indeed. Remember, I don't have any crystal balls, just like you guys, so I don't know for certain what's going to happen. We're just weighing up the probabilities, and no one knows. Just to be clear, no one knows. I know that you guys always think that there's some secret guru that's out there that just hasn't shared his untouched secrets. That's a fairy tale, guys. That is not true. There's no secret indicator. There's no secret gurus out there. It's all risk management and weighing up the probabilities and looking for the best trade based on what the probabilities are. All right, so we've been through a whole lot, guys. Everything is in the description below. I do appreciate all of you. Make sure that you take advantage of those Black Friday specials while they're on. They only come once a year. And then I'll see you on the next one. Have a good day, everyone, and cheers for now.